Welcome to the Profit Talks podcast, hosted by the Orange County Inland Empire SBDC Network, funded in part by the U.S. Small Business Administration and the California Office of the Small Business Advocate. This show is the go-to resource for business owners seeking empowerment, education, and resources to succeed. Join us as we connect you with experts, share the triumphs of fellow entrepreneurs, and reveal the wealth of assistance available to you today to level up your business. So let's go. Let's dive in and learn more. And today we're going to learn about something that I only recently learned about, and many of you probably have no idea exists. We're going to talk about community development financial institutions with the man who's right in the middle of all of it. Welcome, if you will, Darius Mahajer. Did I get it right this time here?
You did. 2 for 3.
2 for 3. I said it right first time, and I screwed up as we were talking again offline here. Darius Mahajer. All right. Main Street Launch. Is that what it's called here? Main Street Launch? And you're one of the partners in this thing here. You're too young to be a partner in a financial institution.
We're a nonprofit, so I'm a senior vice president.
Okay.
Yeah.
They had you listed wrong. I'm moving you up the elevator here, up to a higher suite.
Yeah. Maybe we're foreshadowing something.
That could be. We could be. Let's talk about, before we talk about who you are and how you got into this, let's talk about what the heck it is. We're going to reverse the order here a little bit, because I don't think anybody knows about these things. I didn't know about them until recently, and I don't know how many of them there are out there. So I want to tackle all these things. What is a community development financial institution?
Yeah, thanks for having me on, Paul. I don't think a lot of people know what community development financial institutions are, frankly, and we're one of the best kept secrets, especially in times of recessions and when banks are tightening up.
Not after today, though. Not after today. We're blowing the lid off.
Exactly. Everybody's going to be calling me, so I'll keep the phone lines open. There's about 1,500 CDFIs nationwide, actually.
Wow.
Yeah, I'm going to say they started back in the 70s, and they've just grown exponentially. They're mission-oriented lenders is the best way to describe them in short.
Nonprofit lenders. You're not necessarily like a bank just trying to, I don't want to say predatory. That sounds like a hard thing. You're not just trying to get me to get a loan and worry about it later here.
That's right. We're actually funded by the Department of Treasury, the Small Business Administration. Various banks actually give CDFIs.
We're going to talk about that in a little bit as we get into it, why a bank would refer you business. But you basically go after, do I say the unbankable?
Yeah, that's right. Again, we have a target, so we're looking at women-owned businesses, minority-owned businesses. We had a program that focused on veteran-owned businesses, focusing on commercial corridors that are low to moderate income communities, low to moderate income individuals. Yeah. And
why can't they get a loan for their business? Let's go through 4 or 5 scenarios here. I can take 2 or 3 right away here. One of them might be they might not have a bank. Some of these immigrant communities, they're not too keen, like Vietnamese and stuff, they're not too keen on having a bank account, because when in their old country, that's how they lost their money. The bank seized it or stole it or whatever. Yeah.
Yeah, I see it across the board. About half of our portfolio is made up of startup businesses, and that's almost an immediate when you walk into one of these larger banks.
Right.
Banks want to see that they're making a sound investment.
Show me a track record. Show me that you've done something before. Right.
Got to have 2. I'm not going to say got to, but the rule of thumb is 2 years of tax returns and a positive trajectory. And these startup businesses don't have that. It takes a while to become.
So they're going to friends and family. They're going to you guys. And what can you offer them that a traditional bank can't? You have looser guidelines?
That's exactly right. We offer much more liberal underwriting criteria, being that our bread and butter is an SBA program called Community Advantage. And the SBA gives every SBA lender a certain box to operate within. Now, you'll tend to notice that some of the more conventional lenders are a little bit more conservative in that box. And then you have CDFIs that offer the same SBA loan program.
All right, let's talk about 2 different things. I've never taken an SBA loan, but I think I got the picture. If you want to start a business, want to open a bar or restaurant, that's what I was looking at once a long time ago. And if you qualify against I guess it's your credit and whatever other magic things that they look to. If you do, you got to put in what, 30%, 20%, something like that of your own money? They got to see that you've got a stake in the game here.
Actually, our equity injection is only 10%.
Wow.
Yeah. So that's
And am I correct in the traditional SBA, if I went to Bank of America or something, or another bigger bank, I'd have to put more than that in? I'd have to put 20 or 30% in?
Again, it goes back to that box I was referring to, right? The SBA has a 400-page SOP or standard operating manual that every SBA lender has to follow. And the SBA says minimum down is 10%. If you guys want to go over that, you can. We elect not to. Other lenders may, depending on their risk appetite or the profile of the business.
Okay. And SBA is often a way that somebody starts a business. I'm only thinking of bars and restaurants, but any kind of business, if you're a little manufacturing business or something here.
Totally.
Now, are you offering less than they do? Are you offering a $20 million loan, a $50 million loan, or are these all $5 million, $2 million loans?
Great question. So our product is called SBA Community Advantage. It was piloted by the SBA back in 2011, and it follows the same spirit of the SBA 7A loan, which if folks have done any research on SBA, 7A is their flagship loan program.
The bigger one.
The primary difference is loan size. You can qualify for up to $5 million with the 7A program. We are, however, capped at $350,000.
Okay, so you're dealing with, by definition, probably smaller startups.
And that was the intent of the program. The SBA noticed that during the life of 7A, all lenders, 7A lenders, I think the average loan size across the board was $500,000, and they wanted to bring that loan size down to target smaller commercial corridors, mom and pop businesses. So then they launched Community Advantage to bring that number down.
We're talking about two different problems here. One is, maybe three problems. One is, it's most of these people applying for a loan new, no history or whatever. Is any credit difference? Do I still have to have a 700 or 800 credit score to qualify for this loan? Are you easier if I'm maybe haven't built up my credit or don't have as good a credit?
Yeah, another great question. So again, you walk into a bank, they may have a minimum credit score. You walk in with something less than a 680 or 720 or whatever that magic number is with that particular institution, they may decline you immediately. For us at Main Street Launch, we have no minimum credit score. We do look at credit history.
Wow.
I've lent an applicant that was in the 500s.
Wow.
And
they tell you can't get anything if you're in the 500s.
It was a challenging transaction, but at the end of the day, your FICO score dictates your credit score, dictates your credit history, but it also doesn't, once you clean up your credit, it doesn't immediately catch up, right? It's not, you pay off these debts, your credit's not going from a 580 to a 720 overnight. It can take months or years for that to happen. So as long as we can see applicants are being responsible and accounting for their previous debt obligations, then we're okay to move forward and discuss further.
So we're talking about a smaller loan amount that banks won't fool with through the SBA program. It's a different part of an SBA program for smaller loan amounts. Probably startups with no credit history, maybe not as good of a personal credit history. So all these things that keep them from being unbankable. Do I still have to have a bank account, though, somewhere? Or could you lend to somebody, an immigrant, that said, no, I keep my money in a mattress here?
No, the funds need to go to a business bank account. That's how we verify the 10% equity contribution. The business applicant has to be 51% owned by a permanent resident or U.S. citizen. We have some boundaries there. Collateral is another big one, Paul, where you walk into a bank, they want to be fully collateralized, whether it's business assets.
Put up your house. Yeah, right.
Like your house, exactly. And really, that's not on our radar at all. And I think that really distinguishes us. If you have a home with a ton of equity, yet you're trying to get a loan as let's say a small business consultant with very little business assets, we're not going to go after your secondary. We're not going to have you pledge your home as collateral.
What if I'm renting? What if I don't have a home at all? I have no collateral.
Exactly.
Right.
Yeah. And so we find those two paradigms equal. If you're renting or you own a home with $1 million in equity, you still qualify, and we're not going to penalize you because you do own a home.
So right away, we've identified reasons. I want to start a business, probably a small business. I have no history of doing this. Maybe my personal credit isn't that spectacular. Both of those are going to kick me out. Maybe I'm looking for a smaller amount than the minimum that they're willing. So they want to give $500,000 and up. They want somebody with a high personal credit score. They want somebody with some more skin in the game. They want more than 10% down. They want somebody with some experience in doing this. And where's your collateral? Wow. A lot of people don't one of those 4 or 5 things is going to kick them out of the system here. That's why you guys were created.
Yeah, and the experience I think is important. We also look for 1 year, a minimum of 1 year of direct industry experience, because just because you like to cook at home or drink beers at home doesn't mean you should run a bar or open up a restaurant.
As I discovered when I had my bar.
But in terms of the collateral, in terms of the FICO score, in terms of the time in business, you're absolutely right. We're definitely on the flexible, more liberal side of things when we're underwriting.
All right, last hard question. I'm assuming, because this is a quote-unquote higher risk group, meaning a group that banks hesitate to lend to, whether you see yourself as a higher risk or not, the banks do. No experience, maybe not great credit, lack of experience in the business, limited experience or no experience in the business, as I said, and no collateral, all these kind of things going down the line. Are you a higher rate than the bank would be? You got to build in some risk here some way. I'm assuming these loans are at a slightly higher rate, or maybe they're not. I don't know.
SBA provides a guarantee to the lenders up to 75 or 85% of the loan. So we have a guarantee as long as we're dotting our I's and crossing our T's. If a loan does go bad, we're mostly covered. But because we're a small CDFI, nonprofit financial institution, we can't take a whole lot of losses. And our rates, really, if you compare the rates right now, we're seeing historical rates. With SBA, the loans are based off of Wall Street Journal Prime, which is at 8.5% right now.
Wow.
And our spread is 4%. So you're looking at double-digit rates. But even if you compare that across the board with banks, they may be charging Prime +1 to Prime +2 3/4, not far off from.
And what's Prime these days? We're doing this, and for those listening in the future, we're doing this in June of 2024 here. So
yeah, and that's 8.5% right now.
So they might be 8.5 plus 1 or 2, so they might be 9 or 10. You might,
at the bank.
At a bank, you're saying that you're using a different base calculator, something I never heard of, Wall Street Prime or whatever that is, or something.
Yeah, exactly. It's the Fed rate that's been climbing. We adjust our rates quarterly with the fluctuation of Wall Street Journal Prime, and right now we're at a historical high. I don't have the crystal ball to say what it's going to do this year or next year. They're expecting to lower rates at the end of this year or maybe next year.
But who knows?
Again, who knows? Not going there. But the good news is, the term of these loans can be termed out 10 years. So you take let's say 5% interest loan, and a lender gives you 2 to 3 years to pay that off. And you take a 12.5% interest rate loan, and a lender gives you 10 years.
Just like the cars these days, the car prices have gone up. How do I make the monthly payment? I'm paying it longer. It's 6 or 7 years in some crazy cases now here. So they're extending the term of the loan just so over the long haul, you're paying more money. But if you're trying to meet a budget and make a payment, it's how you keep the payment lower here. Okay, I get that. So you can extend the loan out further, which keeps the payment lower. Can I ever refinance these things? Can I pay them off early if I get lucky?
Yeah, no prepayment penalties. And really the key to keep the loan longer term is beneficial to the small business, because those first few years are very sensitive times for a business to working to get to the break even and a sustainable point. You want to keep as much money in the business as you possibly can versus forking it out for a loan payment.
And can I refinance these at some point? Can I come back?
Yeah. Again, I would say the life cycle of a CDFI is we're that bridge between a small business applicant accessing capital and eventually outgrowing our nest, right? We don't want you. We would hope that before a 10-year term comes up, they're calling me and they're saying, hey, I just got approved at my local bank or credit union, and I'm getting $1 million loan now to open up 2 or 3 more bars or restaurants or hire more staff and keep growing. So that's really the relationship here, is we're trying to bridge that divide, whatever it is, whether it's credit, whether it's collateral, whether it's time in business.
You want to get them up and going, and hopefully they'll go and pay you, not only pay you off, but expand the business and grow the business. That's why you say the federal treasury's funding this thing. I was going to say, where do you get your money? Do you get it from private investors or all from government funds here?
No, we have philanthropists that support us individually. We have SBA. We have Department of Treasury offers a grant to CDFIs, and banks actually get credit for investing in CDFIs.
Put a little of their profit back into, plow it back into planting some seeds that help the community do good, improve their image, and maybe grow some businesses will come back to them and create a relationship and say, okay, This other group took a chance on me. You couldn't, but I'm back because I've gotten bigger. I'm better. Now I want a bigger loan. I want bigger, more traditional bank products. I think it's an incredible idea. I don't know why it's not more known to the public. How do people find you typically? I'm assuming you're on the SBDC show here, Profit Talks. Do you work through the SBDC offices and they come to you and say, people like Craig at the finance office that we've interviewed earlier, he says, hey, somebody's come to us for some free help. They're trying to start a business. They need some capital. They can't get it at their traditional bank. Here, we're going to send them over to Darius here.
That's exactly right. No, I know I've known Craig for many years, and Mike and their whole team. They have a great network down there in Orange County Inland Empire, and that's how we're most known, is through word of mouth. SBDC, the SBA. We meet with bankers because we're not depository institutions. We say, hey, what do you do with the loans that you're declining? I just tell them no. Hey, why don't you send?
So get out of here.
Why don't you send them to me? Give them an outlet, and then if we take the risk on the loan, because we're not a depository institution, at least you're maintaining that relationship. And guess what? That $250,000, $350,000 or $50,000 loan is getting deposited into your bank account.
There you go.
And you're getting credit. And then once they do become bankable, they're going to say, hey, Mr. Banker, thank you for referring me to Darius. Now I need that $1 million loan to continue growing.
It makes so much sense. That's what I was going to. I can clearly see why banks would send you the ones they can't handle in the hope that you can. And the money will get deposited into their bank still. They couldn't do it, but you can. And they've built a relationship rather than tick the person off and say, oh, great, I'm never coming back to your lousy bank. You didn't want to help me. You didn't believe in me.
That's right. It's always better to give. And if we can't do a deal, I have a plethora of resources, whether it's micro lenders, technical assistance providers, or otherwise, that I could say, hey, it's not a no, but it's not now. Right?
Wow. Not a no, but it's not now. Let's say you can go lower then. There are other groups. We haven't talked a lot about micro lenders and some of these other exotic categories. They're just going to give you $25,000 or $10,000 or something. Or
yeah. There's especially in California small businesses. I know it's tough to do business here in some cases, but we're blessed to have so many CDFIs and mission-oriented lenders and technical assistance providers who can really work with businesses to write a business plan, tighten up your projections, clean up your financials. If you
find a little $5,000 grant from the city because you're going into some area they want to redevelop and help with. Yeah,
absolutely.
Wow. Okay, so there's hope for the unbankable, the guy or girl with a dream and maybe not a lot to traditionally back them on it, but a belief and a strong will to succeed. What's the step?
You have to have the will. The will's got to be there. The lender's only going to be as good as the client. It's dedicated to and determined to get the business open. Or
so tell me the stats, and I'm going to guess we're going to set up this. I'll give you two choices because I think there's as I look at this from the outside, I'd say, oh, most of these must fail. They're just dreamers. That's why the banks don't lend to them. They didn't really have enough credit, collateral. All these. The banks are right. These people, by and large, fail. Or the opposite, these people are so determined, somebody gave them a chance, they're never going to fail. These are the people that really aren't going to ever say die. I don't know. Do either of those extremes work, or is it somewhere in the middle?
The pandemic really had an impact on small businesses in California.
True.
And a motto that I used to run off of is if our default rate if we have a 0% default rate, then we're not reaching our audience, right?
Not trying hard enough to get people into a loan product.
There's a fine line between making irresponsible loans and helping the unbankables. Prior to the pandemic, I think our repayment rate was 98%.
Wow. See, that's what I've heard before from this. I was setting you up for that as much as the banks say these people are unbankable, we don't want to mess with them, we don't want to deal with them, they are not bad people. They're not flakes. They're not people who that's why if I was there with microloans, you give somebody, I don't know, in India or some village somewhere, or here in the U.S. even, somebody who's desperate, who just need $5-10 grand to get a sewing machine, to start some sewing business or something, a couple grand here to get something, a cart, a taco cart. I don't want to put any images out there, but I'm trying to think of the smallest little businesses I can think of here. Yeah. And these people, they give it their all. They never want to say die. Because they're so grateful somebody took a chance on them. They're so determined to grow this. They have a will. Whereas you give a $50 million big developer and the thing starts to go south. He says, all right, Darius, it's back. It's yours. You're going to give me more money because I got lots of other projects going on here. In a weird way, the most successful people are the ones that somehow default the most because they've got so many other things going, it doesn't kill them. Whereas if you had all your eggs in one basket here, you're going to put everything you've got into making that work here. That's my impression.
I've had folks sit in my office on the other side of the desk on a couch, and they just had a piece of paper, a letter of intent to lease a space, and it goes back to that experience. They had a ton of industry experience, and no bank was going to look at them. They're like, look, you're rolling off the couch trying to open up a restaurant.
Right.
And I saw the plan and I saw their ability to succeed, and they ended up becoming a Michelin star restaurant within the first year of opening.
Wow. Really? You've seen something like that? And again, I think the difference is, I'm assuming this is a smaller volume that you deal with. You're not, if you're dealing with millions of people, you don't have time to get to know them. But if you're dealing with a smaller volume of customers and committed as a nonprofit to help the community, maybe, just maybe, you get a chance to know them as people, and maybe you get to see something that the paper doesn't show.
That's right. We're a small organization. We have 20 some odd full-time employees. We've been around for 45 years, but our intention is to stay focused, stay in these commercial corridors. Really, largely, a lot of our history was focusing in Northern California, San Francisco, and Oakland, those two municipalities. We, a dozen years ago or so, went statewide, and we're a small team. So, yeah, we're really getting intimate. And this is, like I said, 10-year loans. So these are long relationships, right? Some marriages don't even last.
Many. So I'm going to make a bad joke. You said 20 some odd employees. Are these odd employees that work for you guys? Are you all people that are on a passion and a mission? Or is this just like any other job? I worked at B of A. I'll work here. I'll work some other place here. Is it a different group of people? Are they an odd group of people that work here?
It's definitely a different group. We have folks that came from the banking world that just weren't satisfied with the way the banks handled it. We have folks that came from the nonprofit world. We have people that came from education. I personally came from a sales background. That's why I'm good at what I do, because I'm able to talk to people and talk to them all day long, right, and get the message out.
So what attracted you? You're a sales guy. You can go anywhere. You could sell anything. Why sell this?
Yeah, I got my master's degree in San Francisco, and it was 2010-ish, and I was broke, lost my money, lost my house, didn't have a job. And through my MBA, there was a volunteer opportunity to work with a entrepreneurial training program that focused on minority and women businesses to get their business plans up and running, get them projections. And then after a 3-month course, pitch it to a financial institution to potentially get a $10,000 grant. And that institution was Main Street Launch. Being at San Francisco State and getting my master's, I really found a passion in entrepreneurship. My family, when we were younger, we immigrated here. They were entrepreneurs, so it was always in the spirit.
And where did they immigrate from here? I'm trying to guess where Mahajer is from. Is that India?
No, it's going to fool you. I was born in Poland, and we immigrated to the States when I was a kid.
Poland? Yeah. That's not a Polish name, Mahajer.
There's no ski in there, but we'll talk about that on another podcast.
Okay, all right. I'm part Polish, so I would have guessed that one, but I missed that one totally here. Okay.
Yeah, all good.
All right, so am I stating this too much? I don't want to put you on the spot here or portray you a different way, but you threw out quickly, you were struck. Even with a master's degree, you went through the pandemic, lost your job, lost your house, lost a lot. I would think that would be hard to go get a job and maybe and explain all these things. And now you started this community project, you applied and got some money from Main Street. They took the same chance on you that they take on the lenders. That's where I'm going with this. They saw something in you beyond just the history here.
Yeah, maybe I wasn't clear enough. So it was 2010 when I graduated. So it was the Great Recession.
Oh, the Great Recession. They all blend together here. Yeah.
Yeah, right. Totally. Another bad time in our economy. But no, I was actually an advisor, mentor to one of the small business owners in this nonprofit organization that I mentored, helped them develop their business plan projections. And then she pitched her idea to Main Street Launch. And then through the executive directors, one executive director put me in touch with another executive director. And then I went on to start working for Main Street Launch as a...
I guess what I'm saying is you've seen the other side of it. You look at when these people come in and say, hey, I lost my job. I had some bad problems, some credits, some things here, but don't give up on me. I still got a lot of talent. I still got a lot of drive. I still got a lot of dreams. And where a bank goes, sorry, we don't factor any of that in.
Totally. So I'm very blessed, and I'm happy to try to pass that on and pay it forward.
Well, passion is a big part of this job here, because you're dealing with the unbankable, the unwanted customers. We don't need them. Go away. Get out of here. Give us the big rich people who,
Right.
I always find it frustrating in my times in life when I've been down. I needed more credit. I couldn't get anything. When I was up, everybody wants to give me credit. Here, get another credit card, have a loan, do all this stuff. And I'm like, I don't need it now. I needed it then. But
Yeah.
there's an inverse thing here. When you don't need it, it's hard to get it. When you do need it, it's hard to get it. When you don't need it, everybody's chasing you. I don't know. Thank goodness there's places like you guys. How do they find you? If it's not through an SBA office saying, here's a place, if it's not a local bank saying, I can't help you, but maybe they can. And if it's not through one of your SBDC offices where you came in to help get some free guidance and free assistance on how to write a plan, how to break it down, how to find some funding, all of these are sources for you. How did they find you directly?
They can go onto our website, www.mainstreetlaunch. I don't know if there's a way to put that on the screen later or now, but
we're not that sophisticated.
MAIN Street spelled all the way out, and then LAUNCH.org. There's a way to complete
.org. Keep that in mind. .org. Yeah.
Exactly. We're a nonprofit, 501c3, and they can complete a loan inquiry form on our website, and it'll go to our person who will then funnel
somebody
it down
like
to
you,
us.
one of these odd people that they'll talk to, the 20 odd people. Last thought, give me some good stats. I know stats aren't a story, but I'll end with some stats on this one. You've been doing this for a while. Companies have been doing it for a while. Tell me some success stories. Tell me some numbers and give me one success story that puts it all to light here. How much money you passed out in the world? How much loans have you given? Is there an overall number? Let's start with that.
Yeah, I've been doing this for 14 years. I think this month, been doing it for a while. Over 350 small business loans to start up and existing businesses, totaling $36 million. So about $100,000 loan average if you took that into account.
I knew you'd have stats like that. And tell me one story. Think of a story that puts it on perspective. Somebody that came to you, everybody rejected them. Nobody would listen to them. Everybody thought they were crazy. You guys funded them, and it worked. Tell me that success story. I know you got lots of them. Tell me.
I got a lot of them. I shortly touched on one, the Michelin-starred restaurant.
I thought you were making that up. Somebody actually got a Michelin star after never having a restaurant before?
Yeah, he was a seasoned chef. He traveled the world.
Go look up Michelin stars, folks. Go see how hard it is to get a Michelin star from the Michelin Restaurant Guide around the world. Restaurants kill to get one star. It takes forever if you can do it at all. Okay.
Absolutely. And similarly, I had another applicant come in who was trained. It was actually a referral from the Michelin starred guy. That's how we get word of mouth referrals,
right,
and working with our community-based organization partners. But this individual, again, traveled, experienced chef, came into my office with a business plan and very little liquidity. I don't know, his credit was solid. There was no issues there, but negotiated a lease. We got him a loan. And I want to say 1 to 2 years later, I come into the office. There's a Bon Appetit magazine sitting in the lobby, and he's on the front page saying that he was the best. He was voted best new restaurant in the country by Bon Appetit magazine. So that was just.
And a bank wouldn't touch him, but you guys did.
Yeah, and again, there's just I've had clients that were on Shark Tank, and all 5 sharks were trying to put in an offer,
nipping at their heels here, trying to get in on the deal here.
Yeah.
Well, I think that's the story that needs to be told, and that's why I wanted to end that way, because we assume the unbankable are unbankable for a reason. They're not worth the risk. You guys have proven they are, and there's a lot of good people, an amazing number of people that need somebody to listen to the story and take a chance on them, and if you do, the return is high for the country, the community, and for the organizations like yours. You get paid back, and they grow new businesses. That's the dream of every politician. Let's create more seeds sprouting up in the community here.
And it's the backbone of the country at the end of the day. You and I can all be entrepreneurs. The only difference between an entrepreneur and somebody who's not an entrepreneur is an entrepreneur jumps, right?
Yeah, exactly. They took that risk. They went all in. I did a long time ago, and I'm glad I did. And I say to anybody that's thinking, do it well, do it smart, do it with help. Don't do it alone, because there's a lot that you don't know until you get into it, and you can sink pretty fast. Or you can swim if you've got some other people, like swimming. You don't just throw kids in the pool anymore. Most people don't. You take them to swimming lessons, and they learn to swim, and somebody's supporting them, guiding them, and they can become a great swimmer here. Thank you for swimming along with us here today. Give us the site one more time. We'll give you a plug one more time. It's mainstreetlaunch.org.
That's it.
Okay, and if they want to contact you directly, they say, I don't want to go through anybody else. There's only one guy I want to talk to, that famous guy in the radio show. I want to talk to...
Yeah. I would say email would be best. Darius, Darius, just like Darius Rucker or Darius the Great, at mainstreetlaunch.org.
Darius the Great. You're stretching my history of the Persian Empire here. Okay, Darius the Great.
That was a little hint on the other side of the Polish, too.
Oh, okay. All right. We're going to get to that afterwards. I want to dig into further. All right. Thank you so much for joining us, Darius the Great, and hope that you'll come back sometime and share some more stories with us on an amazing program, Launch.org, one of the many community development financial institutions. I have to read it because I can't remember that long title. Thank you so much for joining us here.
Thanks for having me, Paul.
As we conclude another episode of the Profit Talks podcast, we hope we've empowered your entrepreneurial spirit. Reach out to us to connect with our experts, and let's take your business to the next level. Keep those dreams alive, keep pushing forward, and stay tuned for more. And if you liked what you heard in today's podcast and you want your business to reach new heights, just contact us at profittalkspodcast.org or call us at 1-800-616-7232. That's 1-800-616-7232. So until next time, keep thriving.